Bitcoin is forming an inverse head and shoulders pattern right now with a target extrapolated all the way here at about $71,800. We can see this right here, the first shoulder, the head and the other shoulder. If we then extrapolate here, the move from the neckline all the way to the head, and we can see the target of course being here at about $71,800. What I can also see on the chart is that along the neckline we went down yesterday, and today we wicked down quite a bit. The wick to the downside is quite strong, but we closed up on the upper side, and this makes me believe that we have a lot of bullish momentum in the market. Look, we went all the way down here to a low of $62,500 approximately, but eventually the candle still closed bullish. I mean, the day is not over, but I will assume it closes bullish, and most importantly, it's closing above this trend line, and we're basically holding support, and most importantly, we're still in a bullish trend. We have higher low structure, and this basically makes me believe that we will form this basically inverse head and shoulders pattern and continue the move to the upside from here. And if I take the Fibonacci extension lines from the very top of the previous range all the way to the bottom that we formed, we can see that the range high we have is at the 0.382 level. And then basically I think where we could be going to potentially is into this level from the 0.5 all the way to the golden pocket to find kind of a high somewhere in that range, which is basically between about $70,000 to worst case like 73 to maybe 74, but not necessarily saying we're going there. I mean, there's some trading activity that has been going on at this price range, yes, but basically this aligns very nicely with our inverse head and shoulders target somewhere in between like $70,000 and $73,000. So if I look at this chart, I can basically see the next targets for us if we continue to move to the upside is first of all to break this level previously found resistance of right here like 2 days ago at like $65,500. After that, I think we can go to the previous range high, which is like right here. This is approximately $67,200. And then we go up from there into the inverse head and shoulders target into the $69,000 region, which is of course the November 2021 all-time high. So basically, if I draw it out here, I'm expecting that we could be going up, maybe find some support here, find some resistance here potentially if we form that into new support, and then we move higher from there. And somewhere end of this month, we'll find that target here at the top range, anywhere between, like I said, this November 21 all-time high to like $74,000. And then I think we will go down from there. And most importantly, we will break below this range low, which is of course at like $58,000. And once we do break below that, I think we can move quite a bit further down potentially all the way until October. And I will show you a very interesting chart next, which will tell us that we might go to about $47,000. And the chart I'm talking about is the CVDD, the Cumulative Value Days Destroyed chart. And first of all, before I explain what it is, let's have a look at the chart. Basically, it's a very good indicator of market bottoms. We can see that historically, whenever we get close to the CVDD line, we are basically forming a market bottom. Same thing here in 2022, 2018, and even in 2014. At the moment we go either slightly below or we dip into that line, we basically confirm a market bottom. And I believe that we will once again form that market bottom somewhere around this line, which sits currently around about $47,000 to $48,000. Now let me explain what the CVDD actually means. So the CVDD was formed in 2019. It is fairly recent, and it basically identifies potential major market bottoms by quantifying the cumulative value time destroyed from long-term holders moving old coins. Let me explain it a bit more simply. Okay, so it all starts with the CDD, the coin days destroyed. And let's assume I have bought one Bitcoin 1,000 days ago, and then today I decide to sell it. That basically accumulates 1,000 days of me having held Bitcoin for 1,000 days. It's one coin for 1,000 days. The moment I sell it, it basically adds to this destruction value and the CVDD line goes up. For example, if someone else bought 1,000 Bitcoin today and hold it for 1 day only, even though it is a large amount, it also adds 1,000 days of destruction. So it basically adds a lot more weight to these older coins that were purchased a long time ago by long-term holders. So now to go from the cumulative days destroyed to the value days destroyed to what we're looking at, we're basically just adding a US dollar value to this number. So basically whatever price I sell it at right now, if I held one Bitcoin for 1,000 days, that's 1,000 days of value destroyed. And then I sell it at current prices, I basically multiply that by the current price. And this adds basically that value amount. And the CBDD has historically aligned very well with major market cycle bottoms, just like I showed you guys on the charts here, for example, in 2015, 2018, 2022. And that's why it is used as a key indicator alongside with the realized price line, which I've also shown historically in the past. It is a very nice indicator of major market cycle bottom. So if you buy somewhere around the CBDD line, you most likely buy around the bottom. And of course the CBDD, it trends upwards because as people, as long-term holders especially, sell more Bitcoin, there's more value destroyed and it basically increases that line. And it is a good capitulation signal because when Bitcoin price approaches the CBDD line or dips below it, it historically indicates that long-term holders are basically selling their Bitcoin. They're being exhausted, they're capitulating. Someone who has held Bitcoin for 5 years, they're finally selling their Bitcoin because they're giving up or they're just taking profits, whatever the reason may be. This means basically capitulating. There's a lot of selling pressure then, historical selling pressure. And if we get close to that line, has historically indicated market bottoms. So if we get close to the CBDD line, it's basically telling us that long-term holders are capitulating and are finally selling for whatever the reason may be. And this is a very good indicator for market cycle bottoms. Now, let me quickly show you guys this on my TradingView platform. And we have here the CBDD line. On here, we can see it's about $48,000, like I said. And we can see every single cycle market bottom. And we can see that basically we did find a bottom somewhere below or at the CBDD line. For example, last cycle bottom, the CBDD line was at like $17,800 and we found a bottom at about $15,000 to $16,000. And even before that, CBDD line was at like $3,500 and we found a bottom at $3,100. So very close. Cycle before that, also we can see right here, CBDD was pretty much exactly at the cycle bottom. And even before that, like in 2011, we can see that we basically just touched the CBDD line. And now let's go to right now. We can see the line is at about $48,000. So if we do go down there, I think we can find a bottom at this line. Keep these numbers in mind, please. I think this chart will play out very nicely. Once again, this bear market bottom. On top of that, if we just compare this bear market to the last bear market, we can see basically a falling wedge forming. Look, we're just forming a falling wedge. We're falling to the downside and we eventually break up. And the same thing is happening right now. Of course, this is a bullish target, right? We're looking at it on a weekly basis. And the moment usually we break out towards the bottom of this falling wedge. So this also confirms what I said in the beginning of the video, whereby we basically go up a bit more towards the top range of this falling wedge and then break towards the downside. We break this previous range low at like $58,000, I believe, and then maybe have another bounce. But usually we also have a big capitulation event at the bottom of the bear market. So I wouldn't be surprised if we dip down to the CBDD line. Of course, once people start selling, the CBDD line will start going up as, of course, more value is destroyed in the market. And we might find that bottom here somewhere in the low 50s. I've for now marked the target as like $52,000, which is, of course, also the low right here in this range. If we do dip lower, we could also go into this range of previous trading activity where we have a lot of volume, which is about like $42,000. But essentially, the most important thing for now is to keep in mind that the bottom is most likely not in yet for Bitcoin, and therefore please keep in mind we'll want to wait a bit here, potentially take a short when we break down from there, and then add aggressively into our long positions, spot positions, and really benefit from this upwards move in this upcoming bull market. I mean, have a look at the bull markets. Look, last bull market we went up 672%. In the bull market before that, from the bottom to the top, we went up about 2,000%, and from the market before that, from the bottom to the top, we went up approximately 12,000%. Of course, you can see that the returns become less and less, and maybe we'll go up a few 100%. But what is for certain is that we always create a higher high. So we always create a much higher high than we did before that. Yes, it will probably be less, and I expect it to be maybe around about $200,000, maybe slightly below $200,000. So at least a 3x from where we are at the bottom. So it is still a very good time to invest in Bitcoin somewhere around October this year. And if I just remove the CBDD line and look at the weekly moving average, so you have the 200 weekly, we have the 300 and the 350 weekly, we can also see it is a good indicator maybe not as accurate, but it's a good indicator for market bottoms. We usually find a bottom somewhere between these weekly moving averages. For example, last bear market we went to the 350 weekly moving average. Bear market before that we went to the 300 weekly moving average. And if I add the CVDD line on top of this, we can see that it basically coincides with the 350 weekly moving average. So I definitely think we can go to the 350 weekly moving average. Of course, over time, this might go up a bit as people start selling, CVDD goes up, the weekly moving average start going up a bit more, continues going up, but somewhere here in that range around $50,000 is where I think we can find that bottom for this bear market. And if I just have the 200 weekly moving, okay, but this is just a 200 weekly moving right here, we can see last bear market, what happened is exactly what's happening right now. We dipped just below the 200 weekly, then we went slightly above it and continued to move to the downside. Now that's also what's happening right now. We dipped below it, now we're getting back above it, and then most likely once we hit like 70,000, where I'm gonna be shorting from, we will continue to move to the downside and going into that range low here at the bottom of the falling wedge, where of course we most likely find the market bottom in October. And I always say October because it's about 365 days from the top of the bull market. It has always been like this, from the top of the bull market to the bottom of the bear market is about 1 year in time. And yes, the first time it was about 400 days, but the other two times it took about 365 days. So if history repeats, which it often does, it will take us to about October of this year. And that's the important time to pay attention. But now is the important time to pay attention, to get your money in place and to really prepare a strategy for this upcoming bull market. And my strategy is, of course, to dollar cost average into that long position. So what I'm going to be doing is that once we break this previous range low here, which I believe we're going to be breaking at like $58,000, that's when I'm going to be most likely entering my long positions. I'm going to be entering long positions in a staggered way. So instead of putting everything in at, let's say, $55,000 or even $50,000, in case we don't go there, I want to make sure I'm in the position. And in case we go lower, I want to make sure I have a good entry price. And that's why, in my opinion, the best thing to do is to have multiple entries along the way and therefore catch that bottom while having, of course, a low leverage. You don't want to be liquidated at all costs. Do not get liquidated on your positions because you can be losing out on a lot of money here on this upcoming bull market. So just to summarize what I think will happen now going forward, of course, it's the weekend. Maybe there will be less activity going on for Bitcoin, but as long as we hold this price level, which is basically where we are right now at like $63.7 thousand, as long as we stay above and we close today's candle above here, I expect to continue the move to the upside, slowly going all the way to like the $70,000 to $73,000 level by the end of this month, because July is usually bullish, about 7.7% on average returns for July. August, September are usually bearish months for Bitcoin, and then we break down and we're gonna discuss this on a daily basis. Of course, I'll keep you guys updated. Hope you guys enjoyed today's video. See you tomorrow and goodbye.